Please help me welcome to the stage the CEO of Nakamoto, Mr. David Bailey.
Thank you for coming. Is this the last session?
This is it.
Yeah.
You're a closer.
Closing out the first day.
Yeah. All right, let's do it. All right, first question. These are crowdsourced for you. When you decide to buy Bitcoin, how do you make the decision between buying directly versus seeding a new treasury company? Like, what drives that decision ultimately?
There's different ways that we're actually buying and accumulating Bitcoin. And so the way we're thinking about it is, first and foremost, we want to deploy capital or deploy stock in order to build the Bitcoin balance sheet. And then that balance sheet, we allocate a percentage-based amount of the Bitcoin we're holding to these deals. So we're not, making a decision between buying Bitcoin or investing in one of these companies. We're buying Bitcoin, and then we're setting the percentage from there.
Okay. All right. I think this next question kind of follows up on that. So MNAV premiums, they played a big part in the early playbook. MNAV's kind of a new metric used to kind of measure the value of these companies. But do you think the premiums are sustainable as more companies adopt Bitcoin strategies?
Well, it is sustainable because at the end of the day, why you pay a premium is because the company is growing. And so you're having to make an assessment of what do you think the terminal amount of Bitcoin is that one of these treasury companies is going to hold?
Oh, thank you. Appreciate it.
Let's go.
Cheers.
Cheers. So yeah, you're making an assessment about what is the terminal amount of Bitcoin that this company is worth. And if a company is growing, they have 10,000 Bitcoins right now, and I think they're going to be able to get to 50,000 Bitcoins, in the future. And maybe they're valued at, 25,000 if you made their market cap a Bitcoin equivalent. Well, that's a good buy. So, but in order to justify the MNAV, you have to have growth. And a lot of companies that are launching right now, not only do they not have growth, they are actually shrinking. They're burning money in the underlying business. They're taking what I would consider toxic financing with, predatory interest rates and high OID, and I don't know why they're agreeing to this. It might make a great-looking headline, but it's not going to be long-term viable. So if the business is shrinking and you're actually losing Bitcoin off your balance sheet, well then, not only should you not have a MNAV premium, you should be trading at a pretty significant discount.
Okay, so follow-up question to this. So Nakamoto has a pretty unique business model in that obviously you're investing in other Bitcoin treasury companies. So it's harder to kind of look at MNAV when it comes to Nakamoto. Do you think that new metrics need to be kind of thought through in order to look at a company like Nakamoto and really discover what the value is?
Yes, and I think, I actually think one of the roles that we need Bitcoin for corporations to play is to very clearly articulate and define what the metrics are and how they're calculated. Because there's a lot of people that are using different methodologies to calculate these numbers, and they'll give you a deceptive answer. You think you're buying something at 1 times MNAV, and it's actually 1.3 times MNAV. So I think what we really need is consistency of definitions and metrics. And then, as we have consistency, then we can measure where, we'll create new KPIs where it diverges from those definitions. But right now, you check 5 different treasury websites and you're gonna get 5 slightly different, methodologies on how they're calculating it.
Yeah, I mean, it's definitely something we're working on. We're gonna be rolling out dashboards for our members. Actually, Nakamoto announced today becoming a member officially of Bitcoin for Corporations, so that's very exciting. But yeah, I totally agree. There needs to be more of a standardized way of measuring these companies so that it's not just these random websites that have different numbers. So hopefully we can play a role with that. Okay, next question. When you seed a new company, a new Bitcoin treasury company, how much control does Nakamoto actually keep versus letting the local team run their own playbook?
First off, Nakamoto has not done or announced any investments yet. So that's a hypothetical thing in the future. And I can't even tell you that when we start making the investments that we have a completely defined answer to that question. The strategy evolves as we learn new things. With UTXO, which is the fund we operate at BTC Inc. and how we first got into Bitcoin treasury companies, we're very light touch. We're taking board seats. We're trying to put in the right amount of governance from the get-go that we can protect our investment. that we can ensure if this company traded at a massive discount to NAV, that there's a mechanism or a way to surface the Bitcoin back out, that it's not just stuck permanently there. So, but like we're invested in a lot of companies, and so we have a limited capacity to really be in all the details. I think Nakamoto is going to be deploying at a larger size than UTXO, and so when you're putting $50 million or $100 million into a specific investment, there's a level of diligence and care that needs to be executed on, and I think we will be more in the weeds because we won't be making as many investments as we do at UTXO.
Love that. All right, next question. How do you think about timing when entering new markets? Is it about regulatory readiness, investor demand, or just where Bitcoin scarcity creates the biggest upside?
First off, it's opportunistically driven. So, you want to find the right people, the right partners. There's the necessary ingredients to have a successful treasury company. And so, you got to find those ingredients, and you can't just snap your fingers and be like, Malaysia, let's do it. Assemble the ingredients. The ingredients need to kind of be there. So, but as this trade has gotten so big, now there's so many people working on this that you can find lots of different teams baking with the right ingredients. So then it's okay, well, how big is the TAM of that market? What are the structural barriers that exist that make it where a Bitcoin treasury company in that specific capital market is going to have built-in investor demand? And so we're looking for things like government retirement programs. We invested in this company, Smarter Web, in the UK. Something that we were caught very off guard by is there's a program in the UK called SIP, S-I-P-P. It's the 401k equivalent from the US. It's very restricted on what you can invest into. And so if you want to buy MicroStrategy stock from your SIP, it's a big pain in the ass. And there's a ton of money in this program. But if you're a UK company with Bitcoin on your balance sheet, it's easy. So, Smarter Web was able to tap into this massive retail market of people that wanted exposure to Bitcoin and have money stuck in their retirement accounts. It's very similar to how actually GBTC got so big, because you could buy GBTC in your IRA, and so they tapped into the IRA market. So there's lots of countries around the world that have programs like that. That's one of the things that we're looking for. Or if there's a tax arbitrage play, or if there's a capital control issue, or if there's a really cheap interest rates. So there's lots of ways to kind of categorize the market to assess what is the market size and the opportunity. And sometimes a smaller market but with lots of structural friction could be even more valuable than a bigger market that is fairly easy for people to move money around. I have found though that people over-index or overestimate people's willingness to do things. And I think people think friction. They think, okay, well, is it technically possible for an investor in Japan to buy a stock in the US? Yeah, it's technically possible. There's some hoops you can jump through. There's not that many hoops. But most people don't jump through those hoops. And, my dad, who is an older gentleman, buys U.S. stocks because he lives in the U.S., not because he can't get Charles Schwab to, sell him from their international desk a Japanese stock. So I think that same dynamic exists everywhere. People invest into the markets that they live in, that operate within the legal system that they believe in. And I think there's space for every capital market on the planet to have at least one Bitcoin treasury company, probably multiple Bitcoin treasury companies. And this is a bigger topic of where do these treasury companies, what's their final form that they actually end up in. But my personal opinion is that these really start looking like the next version of banks. They're Bitcoin banks. And every country on the planet has banks. Every country on the planet has lots of banks in it. So, how big is the market size to support these? I think it's very large.
Yeah, I think part of like the question behind this question too could be coming from, a lot of people are here trying to learn about what, how do I do this? What are the steps, or like the really practical steps? I'm curious, you talk about the different ingredients that you look for. Can you speak specifically to like what you look for in a team, what you look for in a CEO that makes them, successful? Where's the next Sailor, the next Simon? Yeah, as you evaluate teams, talk a little bit.
So, significant capital markets experience is number one. What you're effectively doing with these is like you're arbitraging like the legal system and the financial system, and so to execute that, you need to be familiar with the legal system and the and your financial system. So, capital markets experience, ideally deep capital markets experience. You need, a great leadership team across the board. So you want to have people who have public markets experience at the CFO level, at the CLO level. Number two is integrity. Like at the end of the day, there's only so many places that a management team can differentiate the operations of one of these companies. And governance and transparency are two of the key places that you can outcompete your peers. And so, you're building a massive balance sheet. Like investors are trusting you to be a good steward of those assets. And, if someone has a mixed background, if someone likes to, play in the gray zone, you're making a long-term bet here, and you want to make sure that the person you're getting into bed with has a lot of integrity.
There you go. There's some alpha. I mean, it had a lot.
I'll also say, other ingredients that we're looking for is like, we also want to see great vendors. We want to know that you're working with best in class, that you even know what best in class looks like. And so we want to see great vendors. We prefer to see the management team come from the market that they're operating in. So, we've done this different ways with different investments, but I think we found that someone who lives in Japan, who's running and operating a Japanese public company, is going to outperform someone who's not from Japan or lives in Japan who's doing the same. And so we're really wanting to find domain experts in each of these markets that have, relationships that they're bringing to the table already, where they can be the number one balance sheet in that specific market.
Love that. There you go. So come ready, come have a team, and have vendors that are qualified.
Yeah, and then I'm just
Keep
I'm spitballing
Why not?
here as we're talking. So the other thing that we also want to see is like we are these treasury companies are effectively infiltrating the mainstream. Okay, we're like trying to make Bitcoin accessible to boomers. Okay, you're not using boomer in a derogatory way, but Bitcoin for boomers. So you want to have a leadership team in a public image that resonates with that audience. And so you want to go as mainstream as possible. You want to copy all the playbooks that the banks have. So I think like you want to pull people. Bitcoin is like designed to disrupt this entire attitude, but like from the perspective of these treasury companies, it's really to lean in to the entrenched network that exists in each of these markets. Mm-hmm. Like you want to go raise money at the country club, not shut down the country club.
Right. Yeah. No, I think that's really helpful. I mean, your inbound is obviously crazy. Our inbound is crazy. We're seeing a ton of people that think this is easier than it actually is. So I think these insights are helpful. It's like come ready, be prepared. Don't waste time.
Well, I mean, it's getting a lot harder. It's easy to raise money and to do one of these plays when everyone is booming, everyone is winning, every investment that you make is 10x or 20x. Like, yeah, you're going to have an easy time raising money in that environment. We're moving to a much more complex environment where some of these companies are going to be very successful and some of them are not going to be successful. And so now investors are going to bring much more thorough diligence of your deal, and they're going to be less likely to give you money unless they can feel really good that you're going to be one of the winners and not one of the losers.
Right. Yeah. There's a lot of people that think if I just add Bitcoin to my balance sheet, my stock is going to go up, and that's just really not the reality. Maybe it was early on, But like you're talking about, you got to have a lot of other things in place in order to be successful.
Well, I think if you're trading cash that you have on your balance sheet into Bitcoin, like you are going to be successful with that. You're getting rid of an asset that's becoming less valuable, and you're getting another asset that's becoming more valuable. But I think if your strategy is just to issue shares or dilute the company in order to buy Bitcoin, I think that's going to be less and less interesting to the market until the market stops rewarding it. They start punishing for it.
Yeah. This might be obvious too, but just one more follow up on this. How much do you look at conviction in a leader, of one of these companies? The conviction in Bitcoin knowledge in general, is that a big part of what you evaluate?
The Bitcoin knowledge doesn't have to be deep because you can bring in people with deep knowledge onto the team, and it's not like if you're running a public company. That's an operating company. There's some underlying business, and you're doing everything you have to do to stay a public and compliant company. The part of it that's the Bitcoin specific part is like less than 10%. I mean, it's pretty small. So I think you can bring that into a team. In terms of conviction, I think that's a much more important thing. Like you do actually need the leadership team to be bought in, because the worst possible time for them to capitulate is when they'll capitulate. Like it's the darkest that you're most likely to liquidate your Bitcoin, and that's this whole play. The way it works is like you never sell the Bitcoin. You hold the Bitcoin as long as you need to hold it, and as long as Bitcoin keeps growing, you can survive the volatility of Bitcoin. But if you're going to sell 24 months later when the price of Bitcoin's way down, you're not going to make it. So yeah, conviction matters.
Love that. All right, we got a lot of juice out of that question. Let's keep rolling here. A lot of Nakamoto's edge comes from finding markets where Bitcoin exposure is scarce. So how do you figure out which countries or exchanges to target next?
Well, this kind of just goes back to the earlier question. And it's not that holding Bitcoin is scarce in those markets. I mean, like, there's lots of people that hold Bitcoin in America. It's really how much capital is restricted and wants to buy Bitcoin but can't. And sometimes, like, markets where Bitcoin is really big might actually be the place where, like, there's also a lot of capital that can't buy Bitcoin that wants to, like in the U.S. So, yeah, that's how I would think about it. I mean, I think the whales that are out there that I really want to get into are places where Bitcoin's illegal. And I think that Bitcoin treasury companies are actually going to get into markets like mainland China or Saudi Arabia or India much faster than Bitcoin through the traditional buy it through an exchange self-custody, because these countries don't want their users to self-custody, and that's why they've put so many restrictions against exchanges operating there. But with a Bitcoin treasury company, the company exists purely within the framework of their existing capital market. Every user who buys the stock has already been AML KYC through the brokerages. All the capital that's made from the company going up or going down stays within that walled garden. And then the users are not taking self-custody. The business is taking self-custody. And it's way more easier to regulate a handful of businesses than it is masses of people. So if I'm China and I want to facilitate the Bitcoin market in my country so that capital is not leaving, et cetera, to go offshore, then this is a very safe way to do it. And so, of course, we want to move beyond that. We want every market in the world to let every single person self-custody Bitcoin. But, absent us having that ability to do so, this is a major step forward to start letting the business community hold Bitcoin. And so, yeah, I think, Bitcoin's widely held in China, but the first company that's public, that's on the Chinese equity markets trading in RMB that puts Bitcoin on their balance sheet is going to be huge.
No, I think it's a great point. We forget that was a big part of Saylor's success, is just finding that trap capital and, unleashing that into ultimately his stock. So we got to find the next market.
Yeah, I mean, and like back to the point of friction, it's like there's lots of people with money in their brokerage accounts. You can take money out of your brokerage account and wire it to Coinbase to buy Bitcoin. Like that's a thing that 90% of MicroStrategy shareholders have the capacity to do, but they didn't do it. They'd rather just keep the money in their brokerage account and take the easy route and click the buy button and just be done with it. And so, I think it's not just friction that's statutory friction. It's literally just like user behavior friction as well.
Absolutely. All right, well, that is the last question that I have for you. Thank you so much for joining us. Do you have any final thoughts that you want to share?
I think what's happening right now is almost a return to something that's very old. And we are rebuilding the financial system. And, we've already built financial systems before. So the things that we're doing today, maybe they're taking a somewhat different fashion or form, and maybe they're designed for the digital age, but like the Bitcoin Treasury company of today is the gold bullion house or a gold bullion bank of the past. So there's already a roadmap of where this goes. And, I think Bitcoin Treasury companies, again, they're as they evolve and their balance sheets get bigger, they'll turn to monetize those balance sheets and they'll become financial institutions. And gold bullion houses, they started as financial institutions for the business community or the investor community. But if your balance sheet gets big enough, eventually it necessitates you underwriting government securities, lending money to the government, et cetera. And so the gold bullion houses actually became the central banks of the future, or the central banks we know today. So I think if you can have the biggest Bitcoin balance sheet in a country, then strategically and long term, that company is positioned to be a major financial institution as Bitcoin ascends to $1 million of Bitcoin and to $10 million of Bitcoin and so forth. So I think these companies are going to play a critical role in the rebuilding of the financial system for the Bitcoin age. And, if you look at the financial system that exists today, it also has significant influence over government activity. Like when there's this saying, he who owns the gold writes the rules. Well, now it's he who owns the digital gold writes the rules. And so I think there's like a big opportunity for each of these treasury companies to be the institutional face of Bitcoin in their respective markets, to interface with the government and the largest corporations in that market, and to accelerate the creation of new securities with those other counterparties so that they can enter into the Bitcoin race as well. And so, if I could leave you with one closing thought, it's like, you can't just look at what the treasury companies are today. You have to think about the future state of where Bitcoin's going and the context at which these things will exist in that future. And that's what you want to be building towards. So, we're at the beginning of a very long journey, and a lot of money's going to be made, and a lot of money's going to be lost. So is Bitcoin.
There you go. Amen. We'll leave it at that. David, thank you so much for your time. One more cheers. It's been a long day. I know you're jet lagged, but thank you for joining us.